Hello everyone and welcome back to Unravel. It's Elena and in this video I'll explain two common candle patterns which are 3 black crown and 3 white soldier candle patterns. First, we'll start from the 3 black crown pattern and I'll explain what is it, what it consists of, and then we'll move on to 3 white soldier pattern and explore it, including the details of when it opens and when it closes. At the end of this video, I'll show you some chart examples on TradingView and give you some tips on how to trade with these two patterns and what conditions it's good or not good to trade with them. And we'll talk about the pros and cons of this pattern. And at the end of this video, you'll be fully informed and educated about these two common patterns in market. So if you're ready, be sure to subscribe to my channel and let's start. The 3 black crows pattern occurs when bears overtake the bulls during 3 consecutive trading sessions. The 3 black crows should ideally be relatively long-bodied bearish candles that close at or near the low price of the period. In other words, the candles should have long real bodies and short or no shadows. The pattern shows that the price is about to go from uptrend to downtrend and it can show a strong reversal. While trading with this pattern, our entry point will be here after seeing the 3 black crows pattern, and our stop loss will be above the shadow of first black crow pattern. And you can put your take profit according to the support and resistance levels here. The opposite of the 3 black crows pattern is the 3 white soldiers pattern, which occurs at the end of a bearish downtrend and predicts a potential reversal from downtrend to uptrend. This pattern appears as 3 long-bodied white candles with short or ideally no shadows. The open occurs within the previous candle's real body and the close occurs above the previous candle's close. When trading with this pattern, your entry point will be at the end of these 3 white soldiers and your stop loss should be below the shadow of first green candle. Here we have 3 types of black crown and white soldier patterns. What shows the credibility of these patterns are first is volume, second is the shadows, and third is the open and close price of the candles. So here in 3 black crows pattern, after an uptrend, this candle appears, which opens here and closes here. The second one opens above the previous close and close below the previous close. The third one, just like the previous ones, opens above the close of previous candle and close below the close of previous candle. So this is the most common black crow pattern. And here, after a downtrend, this pattern appears, opens here and closes here. The second one opens below the previous close and close above the previous close, same as them. Third one opens below the previous close and close above the previous close. So this one is the most common one. As an example, here we have Euro Z for our chart. We see a 3 black cross pattern, but this is not a key support or resistance level, and here this pattern doesn't change the trend, so this is not what we're looking for. But here, after an uptrend, we see 3 black cross pattern at important support and resistance levels, and 1, 2, and 3. It was able to change the trend here, and we can enter a long trade in this important support level. But as a confirmation, we need to check the RSI here. It is the minimum point of the RSI. So this change to be an uptrend for 1, 2, 3, 4, 5, 6 candles of 4 hours. So we can enter a good profit, long trade here at this support level. Put out take profit here at this resistance level, and our stop loss can be this level. So we'll have 2.2 risk to reward ratio. Another example, we can find it here in US dollar Swiss franc chart, 1 hour chart. At the end of a downtrend, here we see 3 white soldiers pattern, and it was able to change the trend from downtrend to uptrend. Let's check the RSI for confirmation. Here, as you can see, our RSI is on its minimum point, and this 3 candle was able to change the trend. But the most important tip is here. If you want to enter a short trade here, you cannot get that much profit. So be sure to use these patterns, both of them, as a confirmation of trend change, but not to confirm the existing trend. Here is a summary of what we learned today about the 3 black crown pattern. It's a bearish pattern that shows the reversal from uptrend to downtrend and appears as 3 big red candles. Use other indicators such as relative strain index or RSI indicator to confirm the trend change, and don't use this 3 black cross pattern itself. We have 3 important factors on this pattern. The first one is the volume, the second one is the close and open price of these 3 candles, and the third one is where the shadows are going. So be sure to not confuse it with a fake break. And about 3 white soldiers, it appears after a downtrend and shows the reversal from downtrend to uptrend. Again, use other factors such as other indicators to confirm this reversal. And same as the 3 black cross pattern, volume, length of the shadows, and the open and close price of the candles are important factors in trading with these patterns. I hope you enjoyed this video and learned something. If you like it, like this video and subscribe to my channel for more candlestick pattern videos.